Question 1. Which of the following best describes the purpose of long-term care insurance? A. To provide coverage for medical expenses related to hospital stays only. B. To cover the costs associated with personal care and assistance with daily living activities. C. To ensure that individuals receive a fixed cash benefit regardless of their care needs. D. To offer coverage for short-term rehabilitation following surgery. Answer: B. To cover the costs associated with personal care and assistance with daily living activities. Explanation: long-term care insurance is designed specifically to cover the costs associated with personal care and assistance with activities of daily living adults, such as bathing, dressing, eating, and mobility. Unlike health insurance, which primarily covers medical expenses and hospital stays, long-term care insurance focuses on non-medical care services that assist individuals in their daily lives, particularly as they age or when they experience chronic illnesses. This distinction is crucial for understanding the role and importance of long-term care insurance in the overall healthcare system. Question 2. Scenario question. Mr. Thompson is considering purchasing a long-term care insurance policy. He is particularly concerned about how inflation may impact his future benefits. Which option should Mr. Thompson prioritize when selecting a policy? A. A policy with a fixed daily benefit amount that does not adjust for inflation. B. A policy with a guaranteed renewable provision but without inflation protection. C. A policy that includes an inflation protection rider that increases his benefits over time. D. A policy that requires him to pay a higher premium but does not guarantee any specific benefits. Answer: C. A policy that includes an inflation protection rider that increases his benefits over time. Explanation: inflation protection riders are critical in long-term care insurance policies because they ensure that the benefit amounts keep pace with rising costs over time. Given that the cost of long-term care services typically increases due to inflation, a policy with an inflation protection rider will provide Mr. Thompson with enhanced financial security as his needs grow. Options A and B expose him to the risk of having insufficient coverage in the future due to inflation, while D lacks clarity on benefits and could lead to unpredictability in costs. Question 3. Which of the following is a key regulatory requirement for long-term care insurance policies in Kansas? A. All policies must provide coverage for hospice services. B. Insurers are required to offer a free look period of at least 30 days. C. Policies must have a mandatory waiting period of 90 days before benefits are payable. D. Each policy must include a guaranteed issue option for applicants over 65 years old. Answer: B. Insurers are required to offer a free look period of at least 30 days. Explanation: in Kansas, as in many other states, long-term care insurance regulations mandate a free look period, which allows policyholders to review their policies after purchase and return them for a full refund if they are unsatisfied. This period typically lasts at least 30 days. This regulation is designed to protect consumers by ensuring they have sufficient time to understand their policy and its terms. Option A is incorrect, as coverage for hospice services is not universally mandated. Option C regarding a waiting period is also incorrect, as waiting periods can vary by policy but are not universally mandated at 90 days. Option D is incorrect. While some policies may offer guaranteed issue options, it is not a requirement for all applicants over a specific age. Question 4. What is the primary function of benefit triggers in long-term care insurance policies? A. To determine the premium rates for the policyholder. B. To define the specific services that will be covered under the policy. C. To establish when the policyholder can begin receiving benefits. D. To outline the limitations and exclusions of the policy coverage. Answer: C. To establish when the policyholder can begin receiving benefits. Explanation: benefit triggers are crucial in long-term care insurance as they specify the conditions under which the policyholder can access benefits. These typically include the inability to perform certain activities of daily living adults, such as bathing, dressing, eating, toileting, transferring incontinence, or cognitive impairments. Understanding these triggers is essential for policyholders as they determine when benefits begin and ensure that coverage aligns with the individual's needs. Question 5. Which of the following is not a common factor that influences the premiums of long-term care insurance policies? A. The age of the applicant at the time of purchase. B. The applicant's marital status. C. The applicant's geographic location. D. The total amount of benefits selected in the policy. Answer: B. The applicant's marital status. Explanation: While age, geographic location, and total benefit amount selected are significant factors in determining long-term care insurance premiums, marital status is typically not a direct influencing factor. Premiums generally increase with age because older applicants are perceived as having a higher risk of needing long-term care. Geographic location affects costs based on regional care expenses, and higher benefit amounts increase the potential payout, thus raising premiums. Therefore, understanding these factors is vital for prospective buyers. Question 6. Scenario question. Mrs. Johnson has recently purchased a long-term care insurance policy that provides a daily benefit of $150 for a maximum of 5 years. Due to unexpected health issues, she requires long-term care services that exceed her policy's daily benefit. What option should Mrs. Johnson consider to enhance her financial protection for future care needs? A. Purchase an additional long-term care policy with a low daily benefit. B. Seek a life insurance policy with a long-term care rider. C. Increase her savings to cover potential out-of-pocket expenses. D. Review her policy for any available inflation protection rider or options for increasing benefits. Answer: D. Review her policy for any available inflation protection rider or options for increasing benefits. Explanation: Given Mrs. Johnson's situation, reviewing her current policy for any available inflation protection rider or options to increase benefits is the best course of action. Inflation protection riders can help ensure that her benefits keep pace with rising care costs. Options A and B may not provide the necessary coverage or could complicate her financial situation, while C is a sound financial practice. It does not address the immediate need for enhanced coverage. This scenario underscores the importance of understanding policy features and planning for future care costs. Question 7. Which of the following statements about the Kansas Long-Term Care Security Act is correct? A. It mandates that all insurers provide coverage for Alzheimer's disease. B. It establishes standards for the marketing and sale of long-term care insurance products. C. It requires all long-term care insurance policies to include a non-forfeiture benefit. D. It prohibits insurers from using pre-existing conditions as a basis for coverage denial. Answer: B. It establishes standards for the marketing and sale of long-term care insurance products. Explanation: The Kansas Long-Term Care Security Act includes provisions that establish standards for the marketing and sale of long-term care insurance products, ensuring that consumers are adequately informed about their options and the terms of coverage. It does not mandate coverage for specific diseases such as Alzheimer's, option A, nor does it require all policies to include a non-forfeiture benefit, option C. While many policies may have limitations regarding pre-existing conditions, option D, they are not universally prohibited from using them for underwriting purposes. Understanding these regulations is essential for consumers and insurers alike. Question 8. What is the significance of non-forfeiture options in long-term care insurance policies? A. They guarantee that policyholders can recover premiums paid if the policy lapses. B. They ensure the continuation of coverage regardless of changes in health status. C. They provide benefits that are payable regardless of the duration of the policy. D. They offer the policyholder the right to convert the policy into a life insurance policy. Answer A. They guarantee that policyholders can recover premiums paid if the policy lapses. Explanation: Non-forfeiture options in long-term care insurance policies allow policyholders to recover some benefits or premiums paid if the policy lapses, ensuring they do not lose all their investment if they discontinue that policy. This feature is crucial for consumers concerned about the possibility of lapsing due to financial constraints or changes in their care needs. Options B, C, and D do not accurately represent the purpose of non-forfeiture options, highlighting the need for consumers to understand policy features clearly. Question 9. Which of the following best describes the primary purpose of underwriting in long-term care insurance? A. To determine the marketability of the insurance product. B. To assess the financial viability of the insurance company. C. To evaluate the risk profile of the applicant and set appropriate premium rates. D. To establish the legal compliance of the insurance policy with state regulations. Answer: C. To evaluate the risk profile of the applicant and set appropriate premium rates. Explanation: Underwriting in long-term care insurance focuses on evaluating the risk profile of applicants to determine their likelihood of needing care services and subsequently set appropriate premium rates. This process involves assessing factors such as age, health status, lifestyle, and family medical history. Understanding underwriting is essential for consumers as it directly affects their premium costs and eligibility for coverage. The other options do not accurately reflect the primary function of underwriting within the insurance context. Question 10. Which of the following is a key consumer protection regulation regarding long-term care insurance in Kansas? A. Policies must be sold only through licensed financial advisors. B. Insurers must provide a standardized outline of coverage to all applicants. C. All long-term care insurance policies must cover nursing home care without limitations. D. Insurers are allowed to use health status as the sole basis for denying coverage. Correct answer. B. Insurers must provide a standardized outline of coverage to all applicants. Explanation. Kansas law requires insurers to provide a standardized outline of coverage to all applicants for long-term care insurance. This outline helps consumers understand the terms, benefits, and exclusions of their policies, promoting informed decision-making. Options A and C are incorrect. Policies can be sold through various channels, and not all policies are required to cover nursing home care without limitations. Option D is also incorrect, as insurers cannot solely deny coverage based on health status due to regulations aimed at protecting consumers from discrimination. Question 11. In the context of long-term care insurance, what is the purpose of inflation protection options? A. To ensure that premium payments remain fixed throughout the policyholder's lifetime. B. To allow the daily benefit amount to increase over time, keeping pace with rising care costs. C. To provide a one-time benefit increase at the time of claim filing. D. To eliminate the waiting period for benefits. Answer. B. To allow the daily benefit amount to increase over time, keeping pace with rising care costs. Explanation. Inflation protection options are designed to help policyholders maintain the purchasing power of their benefits in light of inflation and rising long-term care costs. These options typically allow the daily benefit amount to increase annually based on a predetermined rate or inflation index. Options A, C, and D do not accurately represent the purpose of inflation protection, as they do not pertain to the core function of adjusting benefits in response to inflationary trends. Question 12. What is a characteristic feature of hybrid long-term care insurance policies? A. They exclusively cover nursing home care without additional services. B. They combine life insurance or annuities with long-term care benefits. C. They require a higher premium than traditional long-term care insurance policies. D. They provide no benefits if the policyholder never requires long-term care services. Answer. B. They combine life insurance or annuities with long-term care benefits. Explanation. Hybrid long-term care insurance policies integrate long-term care benefits with life insurance or annuities, providing policyholders with a death benefit if they do not require long-term care. This feature appeals to consumers who are concerned about the possibility of paying premiums for coverage they may never use. Options A, C, and D do not accurately describe hybrid policies and misunderstand their structure and intended benefits. Question 13. Which of the following best describes a free look period in long-term care insurance policies? A time frame during which the policyholder can cancel the policy without penalty. B. A trial period where the policyholder can use the benefits before making a payment. C. A duration in which the insurer can change policy terms without consent from the policyholder. D. A period in which the policyholder can compare different policies before purchase. Correct answer 8. A time frame during which the policyholder can cancel the policy without penalty. Explanation. A free look period is a consumer protection feature that allows policyholders to review their policy after purchase and cancel it without penalty if they are not satisfied within a specified period, usually 10 to 30 days. This option helps ensure that consumers have the opportunity to evaluate their coverage thoroughly. Options B, C, and D misinterpret the purpose of the free look period and do not accurately reflect its consumer protection role. Question 14. Scenario question. Mr. Thompson is a 65-year-old retiree considering a long-term care insurance policy. He is particularly concerned about potential out-of-pocket expenses if he requires assistance with daily living activities. Which of the following factors should Mr. Thompson prioritize when selecting a policy? A. The insurer's reputation and claims payment history. B. The availability of a premium discount for non-smokers. C. The total number of policy options available in the market. D. The presence of a pre-existing condition clause in the policy. Answer: Hey, the insurer's reputation and claims payment history. Explanation: For Mr. Thompson, the insurer's reputation and claims payment history should be his primary focus, as these factors are critical in ensuring that he will receive timely and reliable benefits when needed. A strong claims payment history indicates that the insurer is likely to honor claims efficiently, while B may provide a discount that is secondary to the reliability of coverage. The availability of many options, C, can lead to confusion rather than clarity, and D is an essential element to understand but should not take precedence over the insurer's ability to pay claims. Question 15. Which of the following statements about licensing requirements for long-term care insurance agents in Kansas is accurate? A. All insurance agents are automatically licensed to sell long-term care insurance upon obtaining a general insurance license. B. Agents must complete a specific training program focused on long-term care insurance before selling these products. C. No continuing education is required for agents selling long-term care insurance once they are licensed. D. Licensing for long-term care insurance is not regulated at the state level. Correct answer: B. Agents must complete a specific training program focused on long-term care insurance before selling these products. Explanation: In Kansas, agents must complete a specific training program that focuses on long-term care insurance before they can sell these policies. This requirement is intended to ensure that agents are knowledgeable about the intricacies of long-term care products and can adequately advise clients. Options A, C, and D are incorrect, as they misrepresent the licensing process and the regulations governing the sale of long-term care insurance. Question 16. What are the key benefits of using health savings accounts (HSAS) in conjunction with long-term care insurance? A. HS can only be used to pay premiums for long-term care insurance. B. Contributions to HS as a tax-deductible, and withdrawals for qualified long-term care expenses are tax-free. C. HS are not eligible for investment growth. They can only hold cash. D. Funds in HS must be used within a year or they are forfeited. Answer: B. Contributions to HS as a tax-deductible, and withdrawals for qualified long-term care expenses are tax-free. Explanation: Health savings accounts (HSAS) offer significant tax advantages when used in conjunction with long-term care insurance. Contributions to HS as a tax-deductible and qualified withdrawals for long-term care expenses, including premiums and out-of-pocket costs, are tax-free. This makes HSAs a strategic tool for managing healthcare costs in retirement. Options A, C, and D inaccurately describe the nature of HS and their benefits, highlighting the importance of understanding tax implications in long-term care planning. Question 17. Which of the following scenarios would most likely trigger a claim under a long-term care insurance policy? A. A policyholder decides to enter a nursing home for personal preference. B. A policyholder develops a chronic illness requiring assistance with daily activities. C. A policyholder has a one-time hospitalization due to a fall but recovers quickly. D. A policyholder chooses to hire a home health aide for companionship. Answer: B. A policyholder develops a chronic illness requiring assistance with daily activities. Explanation: Long-term care insurance is typically triggered when a policyholder requires assistance with activities of daily living, adults, or suffers from cognitive impairment due to chronic illnesses. In this case, the development of a chronic illness that necessitates assistance clearly aligns with the conditions that trigger benefits. Options A, C, and D do not meet the criteria for triggering a claim, as personal preference, short-term hospitalization, or companionship do not qualify under most policies. Question 18. What is the main purpose of the Health Insurance Portability and Accountability Act (HIPAA) as it relates to long-term care insurance? A. To ensure that long-term care insurance policies cover all pre-existing conditions. B. To protect the privacy and confidentiality of health information. C. To provide consumers with a standardized form for long-term care insurance applications. D. To establish maximum benefit limits for long-term care insurance. Answer: B. To protect the privacy and confidentiality of health information. Explanation: HIPAA primarily focuses on safeguarding the privacy and security of individuals' health information, which is particularly relevant in the context of long-term care insurance, as it often involves sharing sensitive medical information during the underwriting process. Options A, C, and D do not accurately represent HIPAA's purpose, illustrating the necessity for consumers and insurers to understand privacy regulations surrounding health information. Question 19. Which factor can be a significant risk for insurers when underwriting long-term care insurance policies? A. The policyholder's knowledge of long-term care options. B. The presence of family medical history indicating chronic diseases. C. The policyholder's choice of home health care providers. D. The policyholder's preference for specific types of care settings. Answer: B. The presence of family medical history indicating chronic diseases. Explanation: when underwriting long-term care insurance, insurers closely evaluate the applicant's family medical history, as a history of chronic diseases may indicate a higher risk of the applicant needing long-term care services in the future. This information can significantly influence premium rates and eligibility. Options A, C, and D are less impactful as they do not represent the same level of risk assessment during the underwriting process. Question 20. In terms of consumer education, what is a crucial element that long-term care insurance providers must include when marketing their products? A. An overview of all policy options available in the market. B. A clear explanation of the benefits and limitations of the policy. C. The insurance company's financial status and market share. D. Testimonials from existing policyholders regarding their experiences. Answer: B. A clear explanation of the benefits and limitations of the policy. Explanation: when marketing long-term care insurance products, providers must ensure that consumers receive a clear and comprehensive explanation of both the benefits and limitations of the policy. This transparency is essential for helping potential policyholders make informed decisions and understand what their coverage entails, including any exclusions or waiting periods. Options A, C, and D do not adequately address the core educational requirement of clearly communicating the specifics of the policy itself, which is crucial for consumer awareness and understanding. Question 21. Which of the following factors most significantly influences the underwriting process for long-term care insurance? A. The applicant's credit score. B. The applicant's geographic location. C. The applicant's health status and pre-existing conditions. D. The applicant's educational background. Answer: C. The applicant's health status and pre-existing conditions. Explanation: in the underwriting process for long-term care insurance, an applicant's health status and any pre-existing conditions are critical factors. Insurers assess the likelihood of future claims based on these health factors, as individuals with certain medical histories may have a higher risk of requiring long-term care services, while geographic location and educational background may influence the overall cost of care and awareness. They do not directly impact the underwriting decision as significantly as health status. Question 22. Which of the following is a common benefit trigger for long-term care insurance policies? A. Sudden onset of a chronic illness. B. Inability to perform at least 2 activities of daily living adults. C. A medical diagnosis of Alzheimer's disease. D. Being over the age of 65. Answer: B. Inability to perform at least 2 activities of daily living adults. Explanation: benefit triggers in long-term care insurance typically include the inability to perform a specified number of activities of daily living adults, such as bathing, dressing, eating, toileting, transferring, and continence. While a medical diagnosis and age can play roles in the context of long-term care needs, they are not standard triggers for policy benefits. The inability to perform a DLS is a widely recognized standard in determining eligibility for claims. Question 23. What is the primary purpose of the right to a free look period in long-term care insurance policies? A. To allow the insured to receive a refund for unused benefits. B. To enable policyholders to review their policy for a set period and return it for a full refund if unsatisfied. C. To provide an opportunity to adjust coverage amounts after the policy is issued. D. To allow insurance companies to conduct additional underwriting. Answer: B. To enable policyholders to review their policy for a set period and return it for a full refund if unsatisfied. Explanation: the right to a free look period is a consumer protection provision that allows policyholders to review their long-term care insurance policy after purchase. If they find the policy unsatisfactory, they can return it within a specified time frame, usually 1030 days, for a full refund of any premiums paid. This right ensures that consumers can make informed decisions and provides an important layer of consumer protection. Question 24. In the context of long-term care insurance, what does the term inflation protection refer to? A. A guarantee that premiums will not increase over time. B. Coverage that increases over time to keep pace with rising costs of care. C. A policy feature that allows for the investment of premium payments. D. A reduction in benefits as the policyholder ages. Answer: B. Coverage that increases over time to keep pace with rising costs of care. Explanation: inflation protection in long-term care insurance policies is designed to ensure that the benefit amounts increase over time to account for the rising costs of long-term care services. This feature is vital because healthcare costs typically rise faster than general inflation, and without inflation protection, a policyholder's benefits could become insufficient as they age. Options A, C, and D do not accurately describe the purpose of inflation protection. Question 25. If Mr. Adams, a 72-year-old policyholder, wants to file a claim for long-term care services, what is typically required during the claims process? A letter from the insurance company's financial advisor. B. Documentation of medical necessity and proof of care. C. A witness statement from family members about his condition. D. A new medical examination by an independent doctor. Answer: B. Documentation of medical necessity and proof of care. Explanation: to initiate a claim for long-term care services, the policyholder, in this case Mr. Adams, must provide documentation that proves the medical necessity of care and the type of services received. This may include medical records, care plans, and invoices from service providers. While a witness statement might be useful, it does not fulfill the standard documentation requirements for a claim. New medical examinations are typically not required unless specified by the insurer. Question 26. What is a hybrid long-term care insurance policy? A. A policy that combines life insurance with long-term care benefits. B. A policy that provides both health insurance and long-term care coverage. C. A short-term care insurance policy that can convert to long-term care. D. A policy that covers only nursing home care. Answer A. A policy that combines life insurance with long-term care benefits. Explanation: hybrid long-term care insurance policies integrate life insurance coverage with long-term care benefits. These policies offer a death benefit and can be used to cover long-term care costs if needed. This combination can provide policyholders with more flexibility and options than traditional long-term care policies. Options B, C, and D do not accurately represent the nature of hybrid policies. Question 27. Which of the following is a key consumer protection measure under Kansas state regulations for long-term care insurance? A. Mandatory policyholder training before signing a contract. B. Annual reviews of all insurance policies by the provider. C. Minimum standards for benefits and coverage outlined in the policy. D. Discounts for policyholders who are also health care providers. Answer: C. Minimum standards for benefits and coverage outlined in the policy. Explanation: Kansas state regulations include consumer protection measures that set minimum standards for benefits and coverage in long-term care insurance policies. These standards help ensure that consumers receive adequate protection and understand their rights and benefits. The other options do not reflect standard regulatory requirements and do not contribute to consumer protection in the same way. Question 28. In determining long-term care insurance premiums, which of the following factors is least likely to be considered? A. Age at application. B. Gender differences. C. The applicant's credit score. D. Family medical history. Correct answer: C. The applicant's credit score. Explanation: when determining long-term care insurance premiums, insurers typically consider age, gender, and family medical history due to their strong correlations with health risks and the likelihood of needing care. The applicant's credit score, however, is generally not a factor in premium calculations as it does not directly relate to health status or long-term care needs. Question 29. Which of the following is an essential resource for assessing long-term care needs as part of consumer education? A. Celebrity endorsements of insurance products. B. Long-term care calculators available online. C. Personal testimonials from friends. D. Informal discussions with family members. Answer: B. Long-term care calculators available online. Explanation: long-term care calculators are important tools for consumers to assess their potential long-term care needs and the financial implications of various coverage options. These calculators can help individuals estimate the cost of care and determine the appropriate amount of insurance coverage required. While personal testimonials and informal discussions may provide some insights, they lack the structured and data-driven approach that calculators offer. Question 30. When assessing claims, which of the following is a critical aspect of the role of care managers in long-term care insurance? A. Approving all claims without further review. B. Conducting audits of insurance company policies. C. Coordinating care services and verifying compliance with policy terms. D. Marketing new insurance products to policyholders. Answer: C. Coordinating care services and verifying compliance with policy terms. Explanation: Care managers play a vital role in the claims process by coordinating necessary care services and ensuring that the services provided align with the policy terms. They verify the medical necessity and appropriateness of care, facilitating communication between the insured providers and the insurance company. Options A, B, and D do not accurately represent the responsibilities of care managers in the context of claims assessment.